Have you ever wondered what would happen if the US dollar, one of the world's leading currencies, suddenly became totally worthless? Well, grab a seat because that's exactly what we're going to explore in today's eye-opening video. As the dollar continues to take a nosedive, a staggering $5 trillion has vanished from the US stock market, raising some serious concerns. So let's dive into the latest news and uncover the truth behind these shocking developments. Alright, let's jump right into it. What's up, everyone? Welcome back to our channel where we keep you in the loop on Wall Street, the US economy, and the latest breaking news. Now, before we begin, make sure to hit that subscribe button so you never miss any of our insightful videos. Also, please give us a like. Alright, now let's talk about what's been making headlines recently. On April 2nd, the US stock markets were dealt a significant blow, dealing with one of the biggest stock market crashes since the pandemic. The S&P 500 plummeted by 6%, the Nasdaq Composite dropped by 7%, and the Dow Jones Industrial Average tumbled by nearly 6%. You heard that right. Investors collectively lost over $5 trillion in just 2 days. So, why did all this happen? What's behind this sudden downturn? Well, there are several factors at play. First and foremost, the recent announcement of new tariffs by the US government sent shockwaves through the markets. As the trade war between the US and China intensifies, investors are becoming increasingly concerned about the impact on corporate profits. The fear is that higher tariffs will erode profit margins and ultimately lead to lower earnings for companies. Another factor contributing to the sell-off is the rising geopolitical tension. Conflicts in various parts of the world creates uncertainty and risk, which can spook investors. When there's a lot of volatility and unpredictability in the global stage, it makes investors seek safer options. But wait, there's more. Inflation is still a haunting concern for many investors. Recent data showing higher than expected inflation readings have fueled worries that central banks may need to keep interest rates elevated for longer than anticipated. Higher interest rates can negatively impact stock valuations, especially in technology and growth sectors. And let's not forget about foreign investors. They've been net sellers of US equities for 8 straight months, continuously offloading their holdings. In March alone, foreign investors sold almost $28 billion worth of US stocks. These massive sell-offs add downward pressure on the market and contribute to its decline. Now, I know you must be thinking, is this the beginning of the end for the US dollar? Is it losing its dominance? Well, let's break it down. Yes, the US dollar did experience a significant drop in value recently, but it's not quite accurate to say that it's dying. While the dollar has declined in value compared to major global currencies, it's essential to consider the bigger picture. Let me show you some figures. According to the International Monetary Fund, the dollar's share of foreign exchange reserves held by central banks was around 59% in the fourth quarter of 2022, only a slight decrease from the previous year. Additionally, the dollar remains the primary currency for international transactions and global financial markets. Although the dollar has been losing some ground, it still holds a dominant position in the global financial system. Furthermore, the United States has the largest and most liquid bond market in the world. Investors often flock to US Treasury securities as a safe haven during times of economic uncertainty. So while it's true that the dollar has declined and challenges to its supremacy exist, such as the emergence of the euro and the Chinese yuan, it's not accurate to claim that the dollar is dying just yet. However, this decline serves as a wake-up call, signaling the need for the United States to maintain fiscal responsibility and implement policies that continue to make the dollar a reliable and trustworthy currency. Now, let's shift our focus to what this means for you, the everyday investor. A weaker dollar has both positive and negative implications. On one hand, it can boost exports as they become more affordable for buyers using stronger currencies. However, it also means that imports become more expensive, which can drive up the cost of everyday items. So, how should you navigate these turbulent times? One strategy is to consider diversifying your portfolio by investing in foreign stocks and assets. By doing so, you can reduce your exposure to the US dollar and potentially mitigate risks. Another option is to invest in commodities such as gold, which tend to perform well during times of economic uncertainty. While it's impossible to predict market movements with certainty, staying informed, diversifying, and keeping a long-term perspective can help you make more resilient investment decisions. Okay, that's all for now. If you found this information helpful, don't forget to smash that like button and hit the subscribe button so you never miss out on our future updates. And if you have any questions or want to share your thoughts, simply drop them in the comments below. We'd love to hear from you. Thanks for watching, and we'll catch you in the next one.